The signals that make markets move, that's what we're here to discuss with XM.com's Peter McGuire. Welcome back, Pete.
Good morning, Will.
Mate, in the week that was and the week that will be, we've come out a week with plenty of data. We're going into a week with more data.
Storm of data this week.
Storm of data.
It is, and certainly. And a couple of big central banks, we're looking at decisions there and big slew of data as far as PMIs. But if we just look in retrospect, last week was, I thought, a fantastic week from a trading perspective. Gold was bid up $40 odd. You've had crude up a couple of bucks. Now that was a little bit surprising. US dollar continued sell-off. Currencies have had a big move. Aussie's back at 77.5, close on. So there's that push to the upside. US dollar coming under pressure. Talk of the Fed as far as not raising rates and inflation they're not worrying about, but everything seems to be going up in price.
How does that work? I mean, in theory, if everything's going up in price, are we getting paid more? Can we afford it? Will we be able to be afforded?
Well, you'd be getting paid more. I would need to get more money off you. So whatever you pay me last week...
So you're saying media is going well?
Is it? Good. Well, I don't know. I need to be getting paid more off you, not less. And that's what because all of my costs are going up.
So you're saying I should pay you more and then put my costs up to cover you?
Well, obviously, do you want to, and this is a very interesting point, do you want to absorb those costs so your bottom line becomes weaker, or do you want to raise your costs?
And will you be price competitive or priced out of a market? Now, these are the interesting questions. Now,
well, that's another part of it. Pete? That's another part of it. And they're the growing concerns. When you throw a couple of $1 trillion across the world to every consumer, then eventually there's got to be a judgment day. So maybe we're marching towards that.
So we're talking products, we're talking services, we're talking capabilities,
we're
talking about organisations who can play
and currencies,
a role in the global economy
and
perform a function and deliver an outcome.
Yes, and the currency is the direct relative of all of these particular inputs. So how the currency performs for a country, and that's what traders are looking at. So
we might need to sack a few, mate, because we all need better performance. But let's get back into what we're here to
talk
about.
Well, we're talking
today.
about a lot of things.
What is driving the market today? What signals are moving markets? And if we look around Asia right now, you know, Bloomberg's told us that in Japan we've got double-digit growth for the first time since 2018.
Not surprising.
We're not here to talk too much about India, but you know what? There's a bit of a bond issue that they need to go and resolve fairly shortly. We've got economic scars delivered pretty much everywhere by COVID. We've been talking about those for a year. We're ready to move on from that story.
They're deep scars too. Right? They've been sewn up. We need Dr. Mike in here to perform some surgery.
Right, and then closer to home, we've got people playing with the real estate markets. So plenty moving markets, plenty driving change. And as we look at whether it be crypto, whether it be the Coinbase discussion,
Bitcoin down nearly 15% over the weekend. Gold bid up $40.
Or do we turn on another sporting program and put another European soccer team out there to put a turbo into a particular driver to move the psychology of the team, and the country and the fan into a more positive frame. So what do we do, Pete? Where do we go from here?
I think this week is going to be a continuation of what we saw last week as far as that US dollar softness. I think gold is going to continue that bid up. There could be a little bit of profit taking, but I think overall the trend is upwards. And a lot of those currencies have been heroes last week, and I think that hero trade will continue. So there's a basket of them. You can look at euro long, yen long, pound long, Aussie long, New Zealand dollar long. They've had great lift up last week, and I think you'll get the first couple of days this week that continued updraft.
Pete, on screen now we've got a chart that's coming straight out of XM's data room. We're talking about the inflation boogeyman reawakening, with the Fed saying it's going to be a transitionary episode. Markets perhaps not so sure.
Well, I don't think they are, because if you're looking at the Fed and their rhetoric as 2024 as far as a rate rise, we're nearly in the middle of 21, that's a lot of years away. So there's 22, 23, I'm not being, I say that seriously, you're talking the best part of close on 30 months, 32 months. So there's the first part of it. Then the second part is, does the Fed, or do other central bankers, start easing back? Canada this week, pulling back their gigantic, as far as stimulus. So if they pull that back, are they one of the first ones off the blocks as far as higher rates? So all of this has got to be taken on board as far as a trader, and certainly from an economic standpoint.
When we think about currencies, we think about FX, and we think about the people who are trading every day on XM. What are you seeing? I mean, what are they're obviously calculating this data into their daily. They're obviously looking at charts like this and saying, well, okay, where to from here?
And they look at the technical.
And well, not only the technical, but then they're absorbing, you know, the global news media's headlines as they roll through, right? So
newspapers, they read them, and I you know, and you've got to read articles because.
Well, take this article. I mean, growth confirms China's resilience. Well,
Exactly.
Here on Bloomberg, we just spoke about, you know, COVID leaving global scars. Another headline here saying that China's retail investors fall out of love with mutual funds. I mean, what does all that mean?
What does it mean? I think that a lot of traders are looking at, you know, are we fully priced as far as equities? Is there further uplift? It's been extraordinary really since the start of April last year, that big recovery phase. And is it running out of steam? Is there more upside? How are earnings looking? PE ratios? And is there a level of now, well, it's fully priced and let's just sit on the sidelines and let's observe? Because there's no doubt that you can't pick a market successfully every single day. And traders sometimes get lost in that. Oh, well, I lost on that one. That's why many traders are trading 7 or 8 different markets simultaneously, and they're across those different sectors. And if they've picked one wrong, axe it. Get out of there, and maybe it's time to be short on that particular market. So it's a different mentality than, oh, well, I'm holding something for the next 6 months or 6 years. Our traders hold something maybe for 6 minutes, 6 hours, and maximum 6 days.
Yeah, it's a big difference.
Absolutely.
Driving into the next chart, yields are cooling, but just barely. Look, watch the $1.20 region and the euro-dollar here, Pete. Walk us through this. What's behind it?
Well, we saw that there was a lot of rhetoric over the last month and a bit as far as, you know, worrying about inflation and yields taking off, and now that seems to have run out of steam a little bit again. The trade-off was, of course, that US dollar had a really big move to the downside. And what happened? Euro went up, yen went up. So currency traders have really enjoyed it. Well, it's been an extraordinary time to trade these currencies really since, well, before Easter. That period of time over the last couple of weeks has been, you know, a great time to be long.
Pete, great time to be long, unless you're in Canada, right? The labour market say they're healing. They say there's faster vaccinations, but I'm reading locking down of Manitoba, looking at, you know, increased vaccinations required in places like Quebec. I'm saying that chart may or may not be sort of fairly indicating what we're seeing. If we're taking the broader news consumption into what we're seeing here, can they actually be healing a labour market when people can't go to work?
Yeah, well, there's a great challenge, and the other side is Canada's saying now that they're going to wind back, as we mentioned earlier, those gigantic stimulus measures. So where we roll from here could be, do they see rate rises earlier than what the Fed's anticipating? Yeah, it's going to be interesting how this year plays out. You've got higher commodity prices. That always stimulates an economy, which is a trading currency like the Canadian dollar. So a time to look at opportunity, Will.
Yeah, so debt on debt, you know, it's like, you know, there's more debt, you know, more stimulus, but perhaps, as they say, they've got to pull it back at some point, otherwise they lose control. And we've come back to that inflation conversation we started the session with. You know?
Exactly.
Where does it go from here? When do you start paying for it?
Yeah.
All right, so looking at the second last chart we're covering today, we're talking about European data. We're looking at, you know, some surprises here. You know, the vaccinations have picked up the speed.
Yep.
Looks like some of this data is a good news story.
Well, it is, and we've seen that as far as they're not as robust in the sense of their economic cycle. Certainly America's ahead of Europe, but at the present time, it could be a nice summer for Europe. If the doors open, we get tourism dollars through there, a sense of feel good, and all of that washes across general Europe, then it might be a nice 3 to 4 months. And that continuing strength as far as euro, do we go back to a 121? So from a currency standpoint, it's not a bad time to, I think, a little bit further good times for that euro and from a trading perspective.
Pete, this headline caught my eye this morning. It's the Europe capitulation trade, and the article is published by Bloomberg. It's in full swing on the vaccine bets, and you know, it's talking about the rebound. It's talking about the sell-off in the bonds. It's talking about you know, investment strategies playing catch-up, rising expectations for European growth, and so forth. And look, it's a similar chart, the one we just looked at, right?
Absolutely.
You know, nice little recovery forecast there, and it's basically suggesting that you know, it's back in action, and after a rocky start, the euro is up, you know, 2% since March.
It's been a great trade, a lot of momentum, and I think that will fundamentally continue over the short run. So I'm not suggesting we're going to see an 89 handle as far as US dollar. That's the US dollar index, that is. But I think that quite possibly by end of month you might be in a 90.8, 90.9 handle. So again, further opportunity for that euro. I'm just making sure that traders are aware. It's been a great start of this second quarter has been extraordinary for currency traders, and that's demonstrated as far as gold. Big tick up last week, huge tick up. And do we breach, 1800 over the next, maybe by Anzac Day? So that's the 25th for everyone that's not aware of it. So I think that continued uplift, time to be long, and nice trades.
So look, rolling back, I mean, again, supporting that the chart we saw there on Bloomberg is the chart here from XM, which is roughly correlating with that uptick.
Yeah, absolutely, Will. So we've got a slew of data, a storm of data, as they say, coming out this week. Have a look at PMIs, watch a couple of the big central banks, ECB and the Canadian Central Bank, and just observe from a trading perspective. Look at your headlines, read your papers, or read online, and be across it, because they're the news and that. And a trader has to be not only looking at charts, but you really have to study a little bit as far as what's going on. Be conscious as far as what's happening with interest rates, what's happening as far as unemployment numbers, PMIs. Learn, and that learning, you're a student. I do karate, and I made reference to it this morning. You chose to do it. Karate is human movement, and we've discussed that a little bit. And so you chose to do a form of, call it martial arts, and yes, and it's human movement. Karate didn't choose you, so you have to understand human movement. And the point I'm saying is, you chose to be a trader. The market didn't choose you. You chose it. So do your study in it. You need to be conscious of it. Understand, read. You don't need a master's degree or a bachelor degree in economics. Go and read. Go and understand. If you don't understand something, ask questions. You've got Google. 30 years ago we didn't have that. There's nothing to reference it to. You needed to study economic books, and a lot of people weren't trained in it. So now it's a different world, and really that's a part of the world through an education standpoint, Will, that allows the transference as far as information. And we'll talk further on that as each month comes in, those little tips that can give the trader a competitive advantage.
Pete, it's been wonderful this morning. We've covered the signals that are driving markets, the data that matters, and here we are at xm.com. And once again, we'll be following markets this week, looking at what's happening for next week, and checking back in with you as it all unfolds.
Absolutely. Pete? Thank you, Will, and do your study.